So today, my goal is to present a collective vision that I've studied and I've seen in practice regarding the security token, its potential and capability in changing the way we transact in business. So I'm going to be reading from some notes here. I think it would be egotistical for me not to, and to your grave detriment if I go without notes here. There's a lot I want to cover, and I know we've got limited time. So let's get started. I actually need notes for this slide too. What qualifies me to speak before you here today is a very interesting thing. I am not a securities lawyer, even though I'm going to be talking about the security token. I'm not a high-tech developer, even though I am a technology entrepreneur. I'm a Georgia Tech EE, and after trying a few startup companies, I decided to stick to my primary focus, which is patent law. As a patent attorney, I've been fortunate enough to represent some very interesting clients that forced me to continue my education and study blockchain space. And it's an interesting perspective to have as both an entrepreneur, having an engineering background, as a lawyer in this blockchain space. And I want to kind of highlight a few aspects. So as entrepreneurs, we understand a good bit about company control, about decision-making, resource allocation, and the security token relates to that. As investors, we understand about transparency, ownership, dividends, returns, and the security token leads to that. And as lawyers, we understand about rules, regulations, compliance, and the security token leads to that. And so the perspective of my presentation is from all of those three aspects. And I think that the reason the security token is on a sharp rise is because it really combines the most important aspect of business today, and I call it, capitalism, where you take innovation and investment and you put them together. And I believe the security token is going to revolutionize that. So last year we had a lot of ICOs. We still have some ICOs today. And I'd like to share a little bit about the path from the ICO to the STO. The ICO stands for Initial Coin Offering, whereas an STO stands for Security Token Offering. Last year, our firm had a lot of people coming to us. They were saying, hey, I want to raise money by pre-selling my product to help start my business. I want to launch an ICO. It's a completely legitimate reason. But many of these companies didn't really have a blockchain-centric technology to allege that they could have a utility token that was going to be the unit of pre-sale, a unit of operation of that blockchain technology. So it was some really hard cases to make. People were trying to tokenize everything. I'm sure that you know about this. Folks were coming to us trying to tokenize fake news, and I turned them down, but somehow they still raised millions. And so the concept of what is a utility token for many folks as a vehicle of raising money became, when you dig deep and you ask enough questions, it was really about raising money without giving up equity in a lot of cases. Now, shout out to the true technologists out there who've made use of a utility token in its real, true, functional form. Those are the true innovators. But a lot of the tokens that were in circulation, they weren't related to the underlying use of the blockchain technology they represented. They were a vehicle for raising money to develop that technology in the future. So lawyers came up with different instruments and systems to say, how do I deal with this as a security, as a regulated aspect, but also as this utility functional unit we came up with tools, the SAFT, the safety, and various other implementations to help navigate this uncertain area of the law. And I assure you, a lot of securities attorneys would sweat bullets when they get calls from SEC enforcement asking them about the SAFT agreements they had made. They were really worried. And so I think the SEC played an interesting role in the transition from the ICO to the STO. They didn't ever establish clear bullet point guidelines, but they controlled the flow enough to take us to a more regulated means of raising money when you don't have a blockchain-centric technology, but you still want to leverage the tokens of the blockchain to raise money. So kind of a brief story on the transition from ICO to STO. All right. What is a security token? It's a representation of an asset on the blockchain. And that's pretty much the definition of anything on the blockchain. So what makes it different? What makes it special? What I find special about it is that it marries securities laws with concepts of business financing and blockchain technology. It combines all of that together and leverages the technical advantages of the blockchain to make for what I believe is a much better fundraising process. I would describe the security token as a representation of an interest of certain ownership, rights, or credits in an organization, and I'm reading from my notes, that has been developed throughout, with regulation that has been developed throughout the decades to define a fair playing field for people to come together and progress society through natural selection and survival of the fittest, redistribution of wealth. If we can encourage and incentivize the movement of money and investment through controls and regulations, I think as overall society, we will make leaps in the way capital is moved and transferred to those who are innovating in society. So a security token is the next phase to help us transfer, in its basic form, money to the innovators, make investors more safe, retain control of their funds, and more comfortable in investing in technology. That's what I hope the security token is going to help us achieve. This is a chart. I'm not going to really go through it line by item, but in case you're wondering what are the differences between a security token and the utility token, they're worlds apart. Yes, there are commonalities, but the security token is a unit of ownership of a right in its basic form, whereas a utility token is a computational requirement for the functionality of a blockchain technology. So there are two different worlds. If you go back through the slides, I found this to be a good chart. So, corporate governance on the blockchain. The security token leads to corporate governance on the blockchain. But first, what do we mean by corporate governance on the blockchain? Stock issuance, profit sharing and bonus distribution, voting rights, record keeping, shareholder communications, transparencies, and liquidity and equity. Those are basic corporate functions that are performed on the books manually that we entrust our CFO with, but today we can have a replicate system, perhaps that doesn't fully replace those roles, but ensures that we can have true data in a trustless system. And so all of these combined, I would say, lead to the Democratic Autonomous Organization, the DAO. This is, I believe, this is my dream, where even our government can embody aspects of an autonomous organization, where our votes are easily applicable, where, take it down to a smaller level, the HOA in the condo or the neighborhood you live in could be tokenized. You could own tokens that reflect your voting shares, you get all the communications you want, and if there's ever a dividend to be had, maybe you could take one. But the DAO has not come to fruition yet. It's been tried, it's being tried, and I believe there's a lot outside of the technological requirements. There's a lot in the practical implementation and implications of how we do business today. So these aspects that I've listed on the left-hand side are components of a greater system that has been tried, has been envisioned, and is what I believe the security token is working towards. But we're not there yet, and there's going to be many stages in between. So I'm going to, cover some of those stages. Stage one, here's where we're at today. You can do this today. You could issue tokens that reflect shares of your company. You could create different classes of stock, of different shares. Some might have voting rights, others may not. You can do that with existing blockchain infrastructure. Smart contracts can be used for vesting schedules. They could be used for time-based vesting for your employees, objective-based vesting for your co-founders. It could even be used for employee pools. And you don't need to tokenize your entire, all of your shares. You could tokenize a portion of your shares. Let's say you're a business owner, you're happy with your investors, everyone's happy they got their traditional shares, but you want to create an employee pool that shares in the company's profits. Well, wouldn't it be really cool if you can tokenize the employee pool and create incentive-based system for them to earn more of those tokens based on how long they've been with your company or how well they're doing, if they're meeting their objectives. All of that can be smart contract regulated. And as a co-founder of a few companies, the hardest part we found in the beginning was truly sticking to the vesting schedules, keeping up with your cap tables, making sure everyone's on point with their objectives. But if you could have a system that helps you manage that, perhaps there could be a little more accountability and a little bit more forward drive. Stage two, dividends and liquidity. This, from what I've seen, blockchain technology is used as a duplicate, a mirror system of the traditional ones. We're using it as a ledger to show proof of ownership in big funds, but ultimately, how the money moves is still in the hands of an oracle operator. What do I mean by that? You could have the best blockchain tech, you could have great audited smart contracts, but if the wallets they control are never funded with money, it doesn't matter how much currency you're entitled to based on your tokens. There's nothing for that smart contract to distribute. So at the end of the day, as it stands now, it's still going to require some element of human funding of these systems before profit distributions and dividends could truly be autonomous. Another aspect is liquidity. I found that venture funds like the concept of being able to easily move their money. In fact, some of the tokenization platforms were started from venture capital funds. Folks who had a lot of money invested in a lot of different places, perhaps even real estate funds, and said, well, what if we tokenize and enable trading between funds? Enable for me to cash out more easily when I need to if I find a buyer. And of course, that would be regulated by the rules of the fund, which could be embodied in a smart contract or controlled by a vote. If I am a security token holder and I want to sell my shares to Bob, Perhaps my board has to vote and approve that transaction before that transaction can happen. So there is advantages in liquidity, but of course, we're a little bit away from that because it's an early system and not a lot of players are in it to trade with. Lastly, the stage 3 from security token to full corporate governance, and these aren't, in approximate order of what I believe to be true, would be the bylaws and voting aspects. From what I heard, blockchain developers, voting is actually not as easy as it seems to implement on the blockchain. To say I have a token, therefore I get to vote, is a complex system. And to enable for an autonomous organization to run, it needs certain approvals, certain instructions that can be provided by the token holders, and the token holders would say vote based on number of shares for a certain action to be executed, like the movement of money. I don't know how many folks are comfortable with it, but I do know folks in development are not comfortable with that, so people with money probably won't be either for now. But meeting minutes, timed voting, deadlines, mandatory participation, getting quorum at your board meeting to vote. I see the security token as taking us a step forward to, yes, sir. 5 minutes. Oh, that's okay, perfect. We're almost done here. The security token taking us in that direction. So I'm going to fast forward us to where we are today. There is no standard model. There is no uniform ecosystem. And when you want to launch an STO, you want to decide on what you want to tokenize first. Do you want to tokenize your equity or do you want to tokenize debt? Do you want those tokens to have voting rights? How many different tokens would you like? You decide on the right ecosystem, you find the right engineers, and you hire the right lawyers. And in the ecosystem, I just want to show you this slide. This is the typical stack. You've got the blockchain that you choose. More likely than not, it's going to be Ethereum. That's the most fundamental one that's being used. Then you got the token standards. The folks who actually, let's call it, program the token and its capability. And I have a chart for you of all the different security-based tokens that are out there today. Then you have the validation layer, which is what you heard earlier in this room, compliance to anti-money laundering rules, know your customer, and all of that regulation. And finally, the liquidity providers. My token is only good if I can cash out or I can trade it. So this is the typical, the stack as it is today on how we are tokenizing equity in companies. You could look at the chart if you review my slides, which will be posted. I think the most important layer to discuss is this validation layer. This is a technical advantage of having blockchain technology embody the security as opposed to a conventional share. You could have built-in regulations and built-in controls for liquidity. I think the regulators would like this. And I won't go over in detail, but, and I think company owners would also like this if they could limit who can sell their shares, when they can sell the shares, when you can cash out. If it's all in there, embodied in code, it's in much more control. So I want to save the last 5 minutes for questions if there are any questions. Liquidity layer, centralized exchanges, decentralized exchanges, both are going to play an interesting role. I think primarily decentralized exchanges are going to win here in terms of enabling security tokens to be traded within compliance of all applicable laws. All right, guys, with that, any questions? I can be done quite quickly. Yes, Helen.
How many corporations are using STO for the corporate governance?
I would say in the last 4 months, there have been, from what I found, about 8 to 12 big security token offerings.
8 to 12
security token offerings. Great, guys. Well, thanks for your attention.